Okay, good evening everyone. My name is Lionel. I'm one of the senior brokers here in Glass Financial. And we definitely do not only, of course, we help investors, we help personal buyers, we help business fund the loans of buying commercial property. So we do quite a lot of stuff, when it comes to getting a loan. So not just the normal person buyer, but we do quite a bit, and combined with all the brokers we have and management team, we have more than 50 years of experience amongst us, so we definitely can assist you with any possible situation you might have. So this is our office here, Gus Financial. As you can see, we work out from this office in the CBD. Just before I start, quick question: anyone of you have one investment property? Huh? Any one of you have at least one investment property? Oh, very good. Two? Oh, good. Three? Ah, more than five? Okay, I know some of you here more than five. So yeah, we've got a lot of seasoned investors in the room. We've also got people who are just starting out, first time investing. So hopefully I'll walk through some of the things you take note when you're going to get a loan, and how you can possibly increase your borrowing capacity, when you're looking to get a loan to buy your first investment property or even your first home. So just very quickly touch on the difference between mortgage brokers and a bank. So the most important thing is that we work for you. So you don't pay us a fee because the lenders pay us, but we work for you in your best interest to find you the best lenders that we have. So we personally have more than 40 lenders just for residential and more than 100 lenders for business finance. So we can definitely help you find the best lenders. So I used to work in Westpac as well. So at Westpac, we recommend you the products based on obviously what we have. But as a broker, we have the flexibility to get you the best lender, depending on your situation. We cater to your individual situation, and we place you with the lender that has the policy that suits your situation. And obviously, inbuilt in us, we definitely help you get the best interest rate out there in the market, depending on your situation. So I'll just go through a bit more in detail. 3 ways you can apply for a loan: through the bank directly, shop around yourself, online. But there are plenty, going on online. You don't know sometimes which lender might be suitable for you. Have clients that did it themselves online and then got kicked back for certain reasons. Probably the bank don't accept the current situation they are in. So there is some risk that if you do too many of that yourself, you might not be able to still secure yourself a loan. Also on the credit report, you might have a lot of inquiries, and you don't really want that. You want someone to assess the situation fully before you even apply for a loan, because having too much credit inquiries actually lower your credit score, which means you might find it hard to get a loan in the future, or get the mortgage broker to do it all for you. So other things that we do for you, we of course proactively collect all your documents, and we take care of your whole process from start to finish. So that means that we liaise with all your relevant business partners, like your solicitors, your real estate agent, whoever that we need, or your accountant, to ask for some of your documents. So we do that on a daily basis. If you go to a bank, they might actually take care of the start process, but you might have to still liaise with your lawyers or your real estate agent for certain documents to pass to them. But for us brokers, it's our interest. Obviously, we work for you to take care of the whole process from the start to finish. So that's the main difference. Obviously, we do that every day. We write broker notes to your credit officers to put you in the best picture, best light when we submit your application. I'll get to you. Give me 1 second.
Can you stand more in the middle?
Yeah, sure.
I think I'm
Do you want to see me?
I want to see your beautiful face.
Yeah, okay, sure. Oh yeah, I missed out some of the guys here. So apologize for that. Yeah, so we liaise with the guys here, as I mentioned, and we also are your main point of contact. So a lot of my clients come to me. Actually, it's not really anything to do with lending. They come to me for advice on tax. They come to me for advice on rental, where to get this letter, that they're not sure of the whole process. or even who to contact if this sort of goes wrong, or yeah, they always come to me. So I feel that I'm the one point of contact. So I think this point is very valid. So it also saves them a lot of trouble from going to different places, and can contact us anytime, 24/7, even after hours. I reply a lot of my messages actually in the evenings, because in the daytime about busy with other things on client appointments. So I reply a lot of my messages at night, or emails at night as well. So yeah, I mean, of course, I try to pick up my phone whenever I can.
To the customer.
Yeah, even after hours, or you can arrange it. Well, I mean, it's individual. Everyone operate differently. I mean, for me, I'm happy to take calls after hours.
All brokers always, no, I mean, it's always ready for you to ask. Yeah, it's always.
Yeah, I guess it's flexibility with us, because I mean, we work for you, as I mentioned, so we try to answer your call as soon as we can, or even if you're busy during the day, we do that after hours. Yeah, because when I used to work in the branch, when we close at 4 or 5, sort of, we only pick up the phone the next day, reply messages, because obviously we finish work. But for us, for me at least, my work don't finish at 5 or 6.
Yeah.
So yeah, so we got that ongoing support for you. So we have more than 40 lenders, or more than 20 plus lenders. We know which lenders suit your individual situation, like if you are a contractor, or if you just start a new company, you got a new ABN, you don't know whether you can get the loan at the mainstream bank. We do have different solutions for you. We can structure the loan for you such that you are able to borrow more than you can at the only one or two banks that we have some lenders that are specialized in that. Especially for investors, we can help you structure that so you can get the next property. You can borrow more. But if you just go to one lender, they might say, your maximum probably 400,000. But if we structure it such that we can go to another lender, which I've done quite a bit for my other clients, they can see that their borrowing capacity actually increases. Actually, one of my clients was buying her first investment property. Her first one was owner occupied. She went to the other major bank, she can't borrow anything. So she came to me. We structure it such that we can actually use a different method to take the repayments, and we go to the second lender, and she could actually borrow 700,000. But mainstream lender probably like 100, 200,000. So there are ways that we can play around to help you borrow more, just so that you can get your next investment property to enjoy all the benefits here that was previously mentioned. Okay, so yeah, and we of course do car loans, personal loans, business loans, and anything you can think of or not think of. And we also help you review your finances every 2 to 3 years when the fixed rate expires. So if you decide to go on a fixed rate, we review that for you. Personally, I review my client finances every year, although I do call them every 3 months, 6 months, just to touch base to see how they're going. So we got that personalized service that we as brokers will give you. The interesting part, how to increase your borrowing capacity. For those of you first time here today, I'm just going to run through that. With the debts, not sure, does everyone understand bad debts? What are bad debts?
Mm-hmm.
Yeah, so basically things like your credit card, personal loan, car loans, even Zip Pay, Afterpay, which are very popular nowadays. A lot of people think that it's not important, but actually those limits actually will affect your borrowing capacity. So before you get a loan, you might want to look at all these and try to minimize it, or close it off, or reduce the limit, so that will help you increase your borrowing capacity. Living expenses, you might try to getting a loan 3 months, or to 6 months, might be good for you to let us have a look at the bank statements to give you some recommendation on how you can cut down your expenses, because the lenders now, they look at every line really clearly, like line by line. They ask questions, not to you but to us, to explain what are these expenses. So if we don't review that for you in advance, to ask you the questions to try to clean up your bank statement, so when you do a loan, you might be faced with being asked a lot of questions, and you might have your borrowing capacity reduced because you had those unexplained expenses or too much expenses. Yeah, that might actually limit your borrowing capacity. So it's good to let someone review your bank statements prior to getting a loan, so that we can actually reduce any unnecessary things there that can actually limit your borrowing capacity. So just talk about some exciting changes in the market. Last couple of weeks, there's APRA actually say that banks are not mandatory to have the 7.25 minimum assessment rate for loans. So a lot of lenders actually come out with the new policies, having the new assessment rate about 5.5 to 6%. So that's actually you can see most borrowers will be able to see their borrowing capacity increase by 10 to 15%. So as illustrated here, a single income borrower with an 83,000 income at the current serviceability rate, this is just very one of the rates that you see with one of the lenders. Some of them are about 7.25 to 8 at the moment. You can see if the assessment rate drops to 6%, you can see your borrowing capacity increasing by a good 80K. So it's quite a big difference in terms of borrowing. If it's a family of 4 with 109,000 income, you would see your borrowing capacity increasing from 559,000 to 636. So also a good 80,000 jump. So that's just definitely good news in the market that you can definitely borrow a bit more, considering that they are trying to be more realistic since interest rate has cut twice this year. So they're actually reviewing that to be a bit more realistic. And as Ken has mentioned, there might be another cut coming according to the Westpac economists. There is also another article that came out today that I saw. They said there might be 2 rate cuts. So I can forward you the article if you want. It was also quoted by some industry expert, not me, but yeah, 2 rate cuts possibly. So you might be seeing a 0.5% cash rate to end of this year. So might be something to look forward to. With the HAM living expense, so that's something that the banks really look very closely now, as I just mentioned. So this is just an average illustration of what it will cost to live in Australia. So not including rent. This is basically your food, your entertainment, your transport, and all other costs. So for a single person, you're probably looking about 1,008. A couple, double that, and average for a family of 4, that's 12,300. Also, you can see that the living expense also increases the income. So the higher income bracket you are, the living expenses will be, of course, it goes up accordingly. However, that also differs between lenders. So different lenders have different HAM benchmark. So for clients that have a very tight servicing, meaning that you can only borrow, say, this much at this lender, with the living expenses, we might be able to research and do comparison between lenders. So this lender might say on 100,000 income, your HAM, your minimum expenditure is actually lower than say Bank A. So you might be able to borrow more with Bank B than Bank A. So that's something that we can do to help you to maybe borrow the amount that you need. So this is a very important thing now, and always being mentioned in the media about how banks should practice responsible lending. That's why they look a lot into your living expenses to see whether you actually afford the loan. So this is something that is very important. It's always in the news. You follow the lending news. So that's something important. And that obviously with a couple, the HAM is different, but basically the higher income you have, the higher the HAM. This is just something I touched about quickly because difference between getting owner-occupied loan and investor loan is that as an investor, you can actually borrow more than owner-occupied. The reason being because you can actually use the proposed rent for the new investment property. You can actually add that into the calculation, so you can actually get more. But how much more? It depends on your living situation. If you're living in family, yeah, the bank might imply a notional rent here, just so that there's some expense. That prior to like a year ago, they don't used to have all these boarding costs, notional rent, but now of course the lenders, as mentioned, responsible lending, they have all these. So if you are living with parents or if you're renting, that will actually affect how much you can actually rent. How much you can actually borrow. But just come to me 3 to 6 months in advance. So we can work out what is the actual borrowing capacity based on your notional rent or the actual rent you're paying. Are you paying too much? Are you paying the full rent for say the whole house where actually you have housemates in there? That might actually also affect, although you're not paying the full rent, but the bank might assess it differently. So yeah, have a chat with us and we can help you to work out the difference.
Are you able to go back closer to the screen?
Yeah, sure. Sorry, I know you need to see me representing. Yeah, that's okay.
No, I noticed everyone was like looking at you and then
Yeah.
keep turning their head.
Fair enough.
Because
So
you're more attractive than the slides.
thank you. Yeah, I'll take that.
Whereas when Kenneth was there, we're all looking at the slides.
Oh no, I'm sure your guys are looking at him. So, yeah, for me, I just naturally walk away. I don't know why.
You want the radiation?
Too bright.
Radiation.
Maybe no. You know why? Because maybe I can't see so clearly here. So when I walk away, it's clearer to me. Maybe that's why. Yeah, I think that's the reason why. Okay, what does rate cut mean to you? I think we're almost there, almost done with my part. So there are a lot of articles, including this article, saying that the rate cut actually spiked house prices jump. So I think for the first time in 2017, the house prices actually went up and auction clearance rate actually increased. So that is reported in the media, not something that I just concocted from nothing. Just in the media, a lot of reports are saying where the market is going. So yeah, from there, if you have any questions, you can pop. I think we still have some time. If any questions, you can let me know. If not, I'll be around. I have a business card on the table as well. You can grab mine. I'm Lionel, by the way. So yeah, any questions before we pass it back to Alpha to wrap it up? Any questions?
So from your experience right now, what was the average application income that you're experiencing? And also, what is the size of the loan as the improvement in your experience?
Well, average income, it really depends because I have clients that, probably one of the applicants, they work part-time, probably they're earning about like 28, 30,000.
This is a typical first home buyer
On
the workforce of 5 to 10 years, which is somewhere where we are right now. So we want to
Sure. So for someone between age group of 25, 35, which I presume most of us are in the age group, we're probably looking at someone with a salary of about 50 to 100,000. 50, so that is probably the more standard kind of salary that I see. Yep. So with the average loan size, it really depends where clients buying. If you're buying somewhere that, like Brisbane, you've got high rent to you, but house prices are still a bit lower. So the average loan size might be 280 to 350 or 380. If you're someone buying Sydney, buying an off-the-plan apartment for 800,000 to $1 million, then you probably see the loan size to be average about 560 to 800,000. So.
But the first-time buyer, a lot of people don't have any loan or they don't have much debt. The bank approve very, very, very quickly. And the owner-occupier rate is much, much lower than the investor rate. What's like about 3%?
Yeah, so now we're looking at the all-time low. So owner-occupier looking as low as about 3 to 3.4.
Yes.
Yeah, depending on what product.
Yes. And also what you can do